Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's June 20th. Hope you guys having a great morning so far today. Well, the markets are doing quite well today. Let's jump right into it, and we'll kind of see why. Uh, Today on the economic calendar, we had the weekly jobless claims that comes out every Thursday. So last week we had 222,000 people apply for unemployment. Forecast is supposed to be kind of in that range at 220,000, and it dropped a little bit further down to 216,000. This week's number is important primarily because this will be the number that will be used by the Bureau of Labor Statistics when they do their sample week in terms of determining the job numbers for the month of June. So with this lower number, it could give us a higher jobs number, and, so it could be a pretty strong one coming July 5th when they announce June's job numbers here. So this could be a useful tool in that regards. So to move on here, we got the manufacturing in the Philadelphia region, which is the Philly Fed Index. This is the gauge that kind of shows the manufacturing. So in May, we had a really nice number at 16.6. This is actually a pretty high number. And forecast is supposed to call for it to come down to about 8, and then drop much further, just on the verge of, kind of like the New York, on the verge of actually going in contraction at 0.3%. So anything above 0 is considered positive movement or positive movement, or anything expansion. Anything below it is contraction. And I believe we saw New York come out with the Empire State Index come out in contraction mode. So as we can see, manufacturing is slowing down a bit here. Last but not least, we got the leading indicators. So already things were slowing down in April. This is 0.1%. And in May, basically 0. This kind of gives us a gauge as to where things are moving along the economy in the next 6 months. And as you can see, even this is indicating that things are slowing down a bit here. So let's jump ahead here, see what's affecting the headline news. And as I mentioned, the stock market is up. It took off yesterday. Basically, it's all about the aftermath of the Fed announcement. So everybody, you know, they got what they wanted, really. The Fed took out the word patient from their and basically said they'll be more accommodative due to where the numbers are coming, especially the effects from the trade talks, especially the stall in trade talks, so that they're going to be more responsive and to help things out. So this kind of sets the stage that they could probably cut hikes or cut rates in July. So it'll be interesting to see. Now we did see. There were some forecasts of potentially they could drop it twice. I even read earlier today that one economist thinks they might do, if things worsen a bit, that they might even cut it by half a point. So that would be interesting if that would be, the one, maybe two cuts into one. That'd be a pretty big cut right there. So I don't know if they'll go half. I think they'll try to be cautious and just go at core increments. But again, as the data goes, I'm sure that's how the Fed will view it as it comes in. Also, there was more dovish comments by the Bank of Japan and the Bank of England, along with the EU's Mario Draghi, and our comments yesterday that were a bit dovish. They too basically said they're ready to act in the stimulus packages to help their economies grow and stuff. So things slowing down. So they too are trying to be a little bit more dovish about where things are at. So let's see how the bond market's reacting to all this. We were just barely up before the announcement yesterday, and then we took off. We closed up about 33 basis points, just above the ceiling of resistance here that's been kind of keeping us down here. And it broke above that. So we did have an intraday price for the better. So we did have improvement in our pricing yesterday. And on top of it, today now we're going into the middle range of the new range bound here, and we're up about 23 basis points. So we definitely are much higher than we were yesterday in terms of pricing. So that's almost 60 basis points, or excuse me, between a half and a three-quarters of a point in pricing, much better here. So, and we got room to grow here, which is even the nice side before we hit our next ceiling of resistance here. As for the yields, they dropped below and got pushed well below the two mark. We're down to about 1.9793, I think it is, and that is the first time we've dropped about below the 2 in about 2.5 years. So it's that's with the pressure on the yields, is now helping out the mortgage-backed securities, and thus getting better interest rates as a result of that. So good news for those who are looking to refinance or purchase. Speaking of such, if you're looking to refinance or purchase, go ahead and DM me. I'll be more than happy to help you guys out. I am a mortgage planner, and I can help you out with your refinancing and purchase needs. You guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.